Studying for the New Jersey Accident and Health Insurance exam? In this video, we break down policy provisions, clauses, and riders in plain English so the wording finally makes sense.
So, if you're getting ready for the New Jersey Accident and Health exam, you've probably hit that one section that feels like a totally different language. I'm talking about the provisions, clauses, and riders. Basically, the internal rulebook of an insurance policy. Well, today, we are going to crack that code.
Okay, let's just jump right in. Does this question make your head hurt a little? Have you stared at these two on a practice test and just guessed? Yeah, these terms sound almost identical, and that's on purpose. They are classic exam traps.
But hey, the good news is you are definitely not alone. And these traps are super easy to sidestep once you know the trick. So over the next few minutes, we're going to break down this internal rulebook piece by piece and turn these tricky questions into points in your pocket on exam day. Okay, first things first, we have to get the foundation right. Before we dive into all the little details, you've got to understand what we're even talking about here. This has nothing to do with different types of policies. It's all about the rules that make any policy actually work. I want you to think of provisions, clauses, and riders as kind of like the operating system for the insurance contract. They spell out all the nitty-gritty details, when you pay, when they pay, and every single condition in between. It's not the what of the policy, it's the how. And this slide right here, it shows that core difference perfectly. You see, the policy type tells you what is covered. A hospital policy covers hospital bills. Simple enough. But the provisions tell you how it works, like the rule that says you have to file a claim within 20 days. Trust me, getting this difference straight is half the battle. All right, let's get into the rules that every single policy is required to have. These are the mandatory provisions, and you can bet the exam loves to test you on them, especially when we're talking about the claims process. So the claims process follows this really specific logical order, and you have to know it cold. First, you give a notice of claim. That's just you giving the insurer a heads up. Then they send you the official claim forms. And finally, you send back those completed forms with your proof of loss. That sequence is absolutely critical. So here's the key. Just lock this little formula into your memory. Notice, then forms, then proof. Don't let the exam try to scramble that order on you. You always give notice first, period.
And here we go, another huge exam trap. Both of these deal with payments, but they happen at completely different times. A grace period is like a safety net that catches you before the policy actually dies. Reinstatement, on the other hand, is the process to bring a policy back from the dead after it has already lapsed.
This is exactly how you should think about it. The grace period just means you're late. The policy is still alive and kicking. It's just, waiting for you to pay. It's not dead yet.
Okay, let's move on to some other time-sensitive rules, and these are called clauses. And folks, this is where we find the most famous, the most notorious pair of lookalike terms that trip up more students than pretty much anything else.
But first, an easy one, the free look period. This is basically your buyer's remorse window. As soon as that policy is delivered to your door, a clock starts ticking. You get a set number of days to look it over, and if you don't like it for any reason, you can send it back for a full refund. No questions asked.
Okay, seriously, I need your full attention here. This is the big one. The probationary period happens only once, right at the very beginning of the policy, and it's a waiting period before your coverage for sickness kicks in. Now, the elimination period, that happens every single time you have a new disability claim. It's the waiting period after you get sick or hurt, but before the insurance company starts cutting you checks. I mean it, burn this into your brain. Probationary is about the start of the policy, elimination is about the start of a claim. One is a one-time thing for sickness, the other is a waiting period for your disability money. Got it?
All right, awesome. Now that we've nailed down the rules that are built into the policy, let's talk about how you can actually customize it. And we do that using things called riders and other optional provisions.
So, what the heck is a rider? It's really simple. It's just an add-on that changes the standard policy. Think of it like when you buy a new car. You can add on optional features like a sunroof or better speakers. A rider does the same thing for your insurance contract.
Now for the exam, there are three you really need to know. The impairment rider basically carves out and excludes a specific health condition you already have. The guaranteed insurability rider, that's like a golden ticket to buy more coverage in the future without having to prove you're still healthy. And the multiple indemnity rider, that's a benefit multiplier. It can pay out double or even triple the normal benefit for certain types of accidents.
And here are 2 other optional rules you'll see. If you switch jobs to something more dangerous, say from an office worker to a logger, the insurer can adjust your benefits. And if you messed up your age on the application, they don't just cancel the policy, they simply adjust the benefit to whatever your premium would have bought at the correct age. The key word for both of these on the exam is adjust, not cancel.
Okay, team, let's gear up. We're about to face the final boss of policy provisions, renewability. This whole section is about the power dynamic between you and the insurer. It decides if, when, and how they can ever cancel your policy or jack up your rates.
And here it is, the ultimate exam trap. Non-cancelable is the absolute best protection you can have. The insurer cannot cancel you, and they cannot raise your premium, ever. It's locked in solid. Now with guaranteed renewable, they still have to renew you. They can't single you out and cancel your policy, but they can raise the premiums for everybody in your group or your entire risk class. See the difference? This ladder right here is the perfect way to see how this all stacks up. At the very top, you've got non-cancelable. That's the most protection for you. Right below it is guaranteed renewable. And as you go down the ladder, through conditionally renewable and all the way to cancelable at the bottom, you can see the power slowly shifts away from you and over to the insurance company. Wow, okay, we have covered a ton of ground. So before we wrap this up, let's do a quick, rapid-fire review of the absolute must-knows for test day. Seriously, if you remember nothing else, remember these 4 things. 1. The claims process is notice, forms, proof, in that order. 2. Grace period happens before a lapse. Reinstatement happens after. 3. Probationary is the waiting period at the start of the policy. Elimination is the waiting period at the start of a claim. And 4. Non-cancelable is the strongest protection you can get.
And that brings us to one last thought. Understanding all these rules isn't just about passing an exam, it's about making you a much smarter consumer. So think about it. Which of these rules would you want in your own policy? Knowing the answer to that, well, that's the first step to really protecting yourself. Good luck with your studies.